Hello everyone, my name is Jake and welcome to Growth Academy. If you're new, please consider subscribing for more content like this one. Let's get on with the video. Michael Burry and Cathie Wood have just accomplished the inconceivable. The two well-known investors are now battling to death. In Michael Burry's latest SEC filing, he disclosed that he was shorting over $30 million of Ark's innovation ETF via put options. Cathie Wood was not just perplexed, but also enraged. She then went on a rampage, totally dismantling Michael Burry's case against her. For years, short selling has been a concern in equities connected to innovation. Short sellers, according to Elon Musk, are jerks that want us dead. They're always trying to make up fake stories and exaggerate any bad news. Cathie Wood has had her fair share of skepticism, but she is now up against the king of short sellers, Michael Burry. This video will go into the hot drama of Cathie Wood's recent declaration of war on Burry. As most of you are aware, Michael Burry successfully shorted the housing market during the 2008 collapse and profited enormously. As a result, he was one of the 4 short sellers portrayed in the film The Big Short. Burry is now launching what he believes will be the Big Short, since he believes the largest crash in history is on the horizon. Yes, Michael Burry has predicted a larger fall than the 2008 recession, the dot-com boom, and the Great Depression. Burry stated in his most recent 13F filing that he just doubled down on his wager against the whole stock market. This wager on America's demise was made via put options. A put option is simply a contract to sell 100 shares of a stock at a set price. In this example, we are selling 100 Tesla shares at $700 per share. The seller of the put options must purchase those 100 shares at the fixed price of $700. If the current price of Tesla stock is $650 per share, we pocket the difference for those 100 shares, which is comparable to $5,000 in profit. In the first place, these put option contracts are expensive. Which of these is the premium? In this example, if the premium was $30 per share, purchasing this put option contract for 100 shares of Tesla would cost us $3,000. By deducting the profit from executing the contract from the cost, we receive a net profit of $2,000, which is comparable to a 60% overall gain on our investment. Burry boosted his stake in Tesla put options by 34%, implying that he now owns contracts for approximately $730 million in Tesla shares. In addition, he boosted his put options on a government bond ETF by an astonishing 53%. This covers more than $280 million of the bond ETF that he is shorting. Burry also holds over $30 million in Ark's innovation ETF through put option contracts. Burry's put options on Tesla stock bonds and Ark's innovation ETF shouted that he believes Cathie Wood is doomed. Cathie, of course, disagrees with Burry's put options, since she recently went on a Twitter rant against Michael Burry by effectively stating that Burry has not observed numerous major signs pointing against him. He is practically admitting that he has not noticed several significant indicators pointing against him. To provide some context, Michael Burry warned a few months ago that hyperinflation is on the way, and he believes that growth stocks and cryptocurrencies will face the biggest crash ever. Cathie's argument begins with a general view of the stock market and the economy, and ultimately ends with heated criticism for Burry in particular. In other words, Michael Burry's bet, which he initiated a few months ago, is not paying off as expected. Bond yields continue to fall as investors expect lower than expected inflation. Furthermore, stocks have continued to rise since March of 2021, indicating that the equity market isn't concerned about inflation. Some may argue that our current position is analogous to the dot-com bubble, but this is not the case. Cathie notes that, unlike the tech and telecom bubbles, this equities bull market has expanded beyond the innovation strategies that bloomed last year to value in other stocks that had trailed the bull market, laying the scene, we believe, for another leg up in innovation strategies. Since the beginning of 2021, growth equities have underperformed in contrast to value companies such as legacy auto, energy, and financials. Most investors may believe that Ark's underperformance in 2021 is a bad omen, but Cathie understands that the reverse is true. Instead of an exponential rise in growth stocks like the dot-com boom, we've seen growth stocks climb first in 2020, followed by an increase in 2021, implying that the rotation will likely return to growth shortly. producing another significant gain in growth stocks. According to Cathie, the equity market is likely to favor disruptive innovation tactics once more when headline inflation breaks and/or recession worries rise. Cathie sees the bond market forecasting two outcomes here, right now. The bond market has continued to rise in recent months, causing bond rates to fall at the same time. This suggests that investors are bracing for a recession or that inflation will be lower than predicted. In the event of increased recessionary fears, investors are flocking to bonds, causing the bond market to rally and bond yields to fall. This would be beneficial for growth stocks because growth-oriented companies must borrow money more frequently, so growth stocks would rise significantly in the first scenario. Lower inflation is the second probable cause for the recent bond rise. Consumer prices are rising across the board, as many of us have seen firsthand. Yet, numerous indications are indicating that inflation is beginning to moderate. One of these indicators is commodity prices. Cathie says that, since mid-May, several commodities prices have been breaking timber down 65% to 70%, copper down 10% to 15%, and oil down 10%. An anticipated rise in the dollar is also detrimental to commodities prices. The U.S. dollar index has risen steadily over the last 3 months, from 89 in May to 93 today. This, along with declining commodity costs, points to decreased inflation. Cathie further stated, now the Manheim Used Vehicle Index, a leading index for new car sales, is falling. The Manheim Used Vehicle Index is a pricing index that tracks used automobile prices. This indicator has recently been decreasing month after month, indicating lower inflation. All these short-term deflationary indications, along with long-term deflation from innovation and disruption, point to lower than expected future inflation. Lower inflation forecasts encourage investors to purchase bonds, leading bond rates to fall. Low bond rates are once again advantageous to growth stocks. Cathie says that if the bond market is accurate, one or both of the possibilities we discussed would be evident in the next 3 to 6 months. As a result, if Cathie Wood is correct, the greatest moment to purchase growth companies is right now, causing Burry to lose a significant amount of money. Even though Michael Burry correctly forecasted the housing crisis, Cathie feels that Burry is currently incorrect. She stated, to his credit, Michael Burry made a fantastic call based on fundamentals and foresaw the impending disaster in the housing and mortgage markets. Cathie added, I don't think he understands the fundamentals that are driving exponential growth and investment possibilities in the innovation space. This may appear to be gibberish, and you would be accurate in that regard. Innovation isn't causing much deflation right now, and it's unlikely to cause much deflation shortly. For example, EVs are growing rapidly, but they still account for a small percentage of total vehicles produced right now. As a result, GDP and revenue growth are unlikely to be significantly influenced by innovation in the short term. However, once exponential growth occurs and innovation accounts for a large portion of the U.S. GDP, macroeconomic indicators such as inflation will be heavily influenced. Let us know in the comments what your thoughts are. As always, if you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.